Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Real estate investment trusts, or REITs for short, have been having a rough go in the high interest rate environment. And that's because higher interest rates translate into higher borrowing costs and lowering profit margins, which impacts both the share price and the dividends. But with Federal Reserve finally starting to cut interest rates, the outlook for REITs is looking up. Then there are REITs like Community Healthcare Trust Inc., traded on New York Stock Exchange under symbol CHCT. It's a healthcare REIT that have been dealing with both high interest rate environment and fallout from 2020 health crisis. John?
Yeah, thanks, Mo. Yeah, during the 2020 health crisis, the healthcare facilities were forced to deal with lower occupancy rates and higher costs associated with evolving protocols to limit the spread of the virus, which increased their costs and, again, further cut into their profits. That's in addition to higher interest rates as well. So it was a sort of a double whammy for healthcare REITs.
Even healthcare REITs that weathered the health crisis were negatively impacted simply by association.
Yeah, exactly. Community Healthcare Trust saw its stock take a big hit during the opening days of the health crisis, cratering more than 50%. But it rebounded fairly quickly, erasing those losses by October 2020. Now, by May of 2021, CHCT stock hit a new all-time intraday high of $43.57. Now, since then, though, CHCT stock has been trading steadily lower, currently hovering near its April 2020 health crisis lows of $18.28 per share. Now, despite the big 27% year-to-date decline in its share price, the outlook remains bright for community healthcare, with Wall Street analysts providing a 12-month share price target range of, I think it's $20.83 per share to $25 per share. Now, for patient-contrarian investors, Community Healthcare Trust is currently trading in an attractive range. Now, for income investors, the low share price and volatility hasn't impacted its dividend at all. In fact, Community Healthcare Trust has raised its payout every quarter since its inception in 2015.
What can you tell us about Community Healthcare?
Community Healthcare Trust is a REIT that owns and acquires real estate properties that is leased to hospitals, doctors, healthcare systems, or other healthcare service providers. The company's $1.1 billion portfolio consists of 198 properties across 35 states, covering 4.46 million square feet. Biggest holdings are in Texas, which accounts for, I think, 17% of its portfolio, followed by states like Illinois, Ohio, and Pennsylvania. Now, the properties actually have a pretty solid occupancy rate of 92.6%, with lease expirations ranging from this year, 2024, through 2044. Because of its diversification, a single tenant accounts for more than 10.7% of total annualized rent.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, let's talk numbers here. How did it do in the second quarter of this year?
Mixed. For the second quarter, ended June 30th, 2024, Community Healthcare reported a net loss of $10.4 million, or a loss of 42 cents per share. That's down from second quarter 2023 earnings of $6.5 million, or earnings of 24 cents per share. Now, second quarter revenue was down slightly at $27.51 million. Year-to-date revenue, though, was up 3.3% at $56.8 million. Funds from operations, which are important for dividends, came in at $11.6 million, or 43 cents per share. Now, that's down from $15.8 million, or 62 cents per share in the same period last year. Meanwhile, adjusted funds from operation was down slightly to 53 cents per share. Now, the company said the decline in funds from operation and adjusted funds from operation was largely a result of one client with 6 leases that had trouble keeping up with its payments. Now, this resulted in a reduction in funds from operation per share of 12 cents and adjusted funds from operation of 9 cents per share. Now, that sounds like bad, but management didn't provide any guidance after reporting 2023 earnings per share of 2 cents. Wall Street analysts expect the company to report a loss of 11 cents per share in 2024, followed by a big rebound in earnings to 45 cents per share in 2025.
This is something income investors will like. This REIT hiked its reliable quarterly dividend payout again.
Yeah, returning value to shareholders is an important part of community healthcare's business, and that's not just because it legally has to distribute at least 90% of its taxable earnings to shareholders in the form of a dividend. Now, in addition to paying a reliable dividend, community healthcare has actually increased its payout every quarter since its inception in 2015. So even when the company's stock was decimated during the 2020 health crisis, it gave its shareholders a raise every single quarter. Now, most recently, this past July, the company's board declared a quarterly cash dividend of 0.4625 cents per share, or $1.85 per share on an annual basis for a forward dividend yield of 10.37%. Now, that 0.4625 payout represents a slight increase over the 46 cents per share paid out in the first quarter of 2024, and a 2.2% increase over the 4.525 cents paid out in the same period last year. Now, if history is any indicator, its third quarter dividend payout should be 0.465 per share.
John, thank you so much for your insights. Just to recap, Community Healthcare Trust Inc. is a REIT with a growing diversified portfolio of healthcare properties across 35 states. Unfortunately, over the last 3 years, its share price has, for the most part, been held by higher interest rates. The fact is, over the last 5 years, covering 2018 through 2023, Community Healthcare's revenue has grown 132%. Its net income has increased from 3 of the past 5 years, and free cash flow has grown in 4 of the last 5 years. This is probably why institutional ownership stands at whopping 92.3%, with BlackRock Inc. being the largest shareholders at 16.63%. Community healthcare stock may, as of this recording, be down 34.5% over the last 12 months, but over the period of time, BlackRock has collected $8.63 million in dividends. Individual investors probably can't build up to that kind of position, but they can certainly take advantage of community healthcare's reliably growing dividend while they wait for the company's stock to rebound. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.